This episode is made possible by NetSuite by Oracle and Brex, the AI-powered spend platform.
Hi, I'm Erin Sawyer, CFO of Certinia, and we're listening to the CFO Thought Leader podcast.
This is episode 1026.
Jack, I want to take this opportunity to say AI is truly going to change, and not just Gen AI, even AGI, is going to fundamentally, change the way in which we will work, we will operate, we will interact, with each other. I spent, a good part of May, in fact, all of May, I was actually in the US. I came home with, I would say, familiarizing myself with what is happening around and how, as a finance leader, I need to approach, these elements as well, because how business leaders are approaching, these was really eye-opening for me personally as well. And I would really encourage, finance leaders to get out of their shell if they have not already done so, and familiarize themselves, not just for them, but for their teams and for their organizations as well, because it'll have you caught unaware and off guard if you do not grapple with this opportunity.
Hi, it's Jack. On today's show, we speak with Kabir Ahmed Shakir, CFO of Tata Communications. According to CFO Kabir Shakir, when AI giant Nvidia sought to expand its alliances in India, it knew exactly who to put on its short list. Says Shakir, they did their homework and they tapped on Tata's door. This partnership, Shakir tells us, is but one of a number of alliance milestones in Tata's journey to become the national AI champion for all of India. Along the way, Tata Communications received its first order of Nvidia technology and has fast-tracked its integration into its production processes. With Tata's dominance in the Indian market, CFO Shakir tells us the company is now determined to capitalize on its Nvidia partnership to drive growth through AI innovation across all its offerings. You'll hear about this and much more on today's episode. We'll begin after this. 37,025-1. These are the three numbers to remember to get the visibility and control you need to make the right business decisions instantly. 37,000. That's the number of businesses which have upgraded to NetSuite by Oracle. NetSuite is the #1 cloud financial system, streamlining accounting, financial management, inventory, HR, and more. 25. NetSuite turns 25 this year. That's 25 years of helping businesses do more with less, close their books in days, not weeks, and drive down expenses. 1. Because your business is one of a kind, you should get a customized solution for all of your KPIs in one efficient system and with one source of truth. Manage risk, get reliable forecasts, and improve margins. Everything you need, all in one place. Right now, download NetSuite's popular KPI checklist designed to give you consistently excellent performance, absolutely free, at netsuite.com/KPI. That's netsuite.com/KPI. Hello, we're speaking with Kabir Ahmed Shakir, CFO of Tata Communications, which operates today in 190 countries, and last month announced its fiscal year 25 Q1 earnings, with data revenue increasing by 20% year over year, and the company's digital portfolio revenue, and this is a big number, increasing by 51.5%. Kabir, good to have you back with us. Welcome.
Thank you very much, Jack. Good to be back.
As some listeners might recall, Kabir joined us on episode 818
where he helped us retrace his career journey. An episode well worth listening to. As a refresh, I just want to mention two quick items from Kabir's bio I know you'll find interesting. Prior to joining Tata Communications as CFO in 2020, he served as CFO of Microsoft India for 3.5 years. And before that, he spent 23 years climbing the finance career ladder at packaged good giant Unilever. We first spoke to Kabir in 2022. He was 2 years in to his CFO tenure at Tata. That tenure is now 4 years deep, and we're pleased to have him back. Later, we hope to have him reflect a little on that tenure to date and provide some career insight, perhaps to you going forward. But right now, let's begin with Tata's recent announcements, in particular, that digital portfolio revenue number of 51.5%. We're wondering if you can elaborate on that a little bit for us. What's driving that growth? Are there specific products or services, or what can you tell us?
Yeah. Jack, let me first lay a little bit of a context, and a background to this, because much has happened since we spoke 2 years ago. Last year in June, and in fact, every June we have our Investor Day. So last year in June, we went and stuck our neck out and we said our aspiration in Tata Communications, our ambition is to double our data business from the 2 odd billion to 4 billion. And that came after our first milestone, and our milestone got a little bit delayed because of COVID. That we wanted to get this business, which was for more than a decade and a half, growing in low to mid single digits. Our first pit stop was, let's get this business to grow in double digits. And once we got the data business to grow in double digits, we had about 4 or 5 quarters of double digit growth. Then we got together as a management team and said, hey, what is the next target that we should aspire for? When we looked at the opportunities that are available for us in the marketplace and the potential that we could tap and the capabilities that Tata Communications had to satisfy the digital transformation needs of our enterprise customers, we then said, you know what, let's stick our neck out and say we're going to double our data business. Even today, if you really ask me, do I have line of sight of where the doubling of the business is going to come from? Probably 65-70%, but I think the balance 30% is what gets me up from bed every day and come to work and find the answers for it. So against the backdrop of that, we went ahead, and I'm sure we'll talk about that as we get along on the acquisitions that we did. We were very clear that there are 2 big components of our data business: core connectivity, that is growing, actually globally declining, but we are growing low to mid single digits, and our aspiration is to continue to grow low to mid single digits. Then the next part of the portfolio was the digital portfolio, which is what we want to use core connectivity as a foot in the door, get into the enterprises, make ourselves relevant with the digital portfolio and services. So there, whether it's connected solutions, whether it is our Move platform, IoT solutions, our cloud and hosting, our security and SASE, our media portfolio, and the works, right? So all of these come together, to offer more and more services so that we can be better relevant, to our enterprise customers. Now, that is where we are in that journey. Of course, acquisitions have helped, us in getting that staggering 51%. But otherwise, if we really want to double our business, you can do the math. If a good chunk of my business, which prior to the Kalera acquisition was 64% was the core connectivity business and 36% was digital portfolio. If 64% of the business were to grow in low to mid single digits, and the total business had to become double in 4 years' time, then you can do the math yourself that the digital portfolio needs to grow in 30% or so, year on year, in order to get to that number. And we do believe that they have the potential to grow at that particular level. So, of course, the first year was helped by acquisitions, but once we are past that, we are committed to keep growing this business, at that rate.
We want to ask you about some of the acquisitions, but I'm curious, when you said that digital portfolio types of offerings, that's where you are looking to get your foot in the door. That makes it sound like new customers or different types of customers for Tata? Is the customer mix changing? And if so, what respect?
Well, I mean, customer mix is largely not changing. Our foot in the door is through core connectivity, but the once we come in through core connectivity, we want to be able to offer all of these, layers of products. In fact, last time when I spoke, we spoke about a term called PPR, which is product penetration ratio, the number of products that I sell to a customer. Now we have gone a little, a level above. We call it customer relevancy quotient, right? Is not just the number of products that I sell, how many $1 million customers that I have in the $1 million cup, how many $10 million customers do I have, how many $50 million customers do I have, and therefore not just an ambition, but also organizing your go-to-market organization in pursuit of that ambition as well, right? So that's when it really adds a lot of value, because core connectivity after a point in time is a commodity. It is prone to price erosion, and bought that. If you want to talk value, then these are the products and services that help you talk value to your customers.
Can I ask you something about your go-to-market organization compared to 4 years ago when you first arrived? And we know go-to-market finance has a seat at the table, but it's a collaborative effort often. Can you tell us how that organization or its approaches may have changed?
Yeah. See, we first started with a strategy on a page, and I will talk only that element, in response to the question that you're asking. We said we will move from products to platform and solutions. So instead of selling point products, we will offer platforms and we will offer solutions to our customers. So first, that itself, gives you a credibility to the customer that I'm interested in offering them solutions rather than selling what I have. Then we said deeper with fewer. When I said deeper with fewer, what we did, 2 years back and what we are now, even we have become a little better. First, we started off with top, 300 customers, and the next 700, and then the digital tail. Now we have G50, the global 50 customers, that we want to address, and then my top 300, and then my next 700, and then my digital tail. So when you segment customers, like this, you are augmenting them with direct coverage, which means I have a dedicated account executive and an account team servicing that customer, who then gets innately very, very intimate with what that customer's growth strategy is and how we can, as Tata Communications, partner in that growth strategy. Right? Then it also augments with what we created as a customer success pod. So we have a customer success manager, we have a solution architect. So therefore multiple parts of the organizations come together in order to service the customer. So those are the elements, I would say, Jack, that we have gone ahead in terms of designing the organization. What we have then did in the last few years is increased our foot on street, right? So the international geographies is where I believe we have a lot of potential, to grow. So we invested a lot more feet on street in the international. In fact, over the last 18 months, we probably, minus the acquisition, we added about 2,000 people, from a headcount perspective in Tata Communications. Half of it went to the product organization, where we are investing in the next generation of products. And the balance half went to the sales organization, wherein the majority was in international geographies outside of India, because that's where we would like to expand. So I would say a combination of both structure and also in terms of augmenting that with people.
Very good. Thank you for that overview. Appreciate that. We want to ask you about these U.S. acquisitions, particularly the Switch and the Kellera. Share with us why were these attractive and important to where you're headed?
Yeah. Firstly, I want to give a little bit of perspective on what is our approach to acquisition, because there will be more, and M&A will remain a very, very important element of our strategy. Now, why is that important? We are in the digital, industry. We are in the digital ecosystem, Jack. I would be naive or stupid to believe that all innovation will be homegrown. There will be definitely, innovation and creativity and new area of technology where there will be capability that will be available in various parts of the globe, and I would like to have access, to that in different forms and shapes, right? So we do have a partnership with academia. We have partnerships with ventures and and in the startup ecosystem. So there are multiple tentacles with which I would like to approach that, and some of them will culminate into M&A, and I don't want to discount that at all. So the M&A led growth will be an integral part. How much is there a target? No, because it will be irresponsible if you put a target to it, because you'll go chasing that target. And therefore, my underpinning principles is it has to make strategic sense. It has to have business synergy, and it needs to come at a good value, right? I mean, those three things are very important. And of course, the banker is that I should have the ability and the bandwidth to execute and integrate. Any person can, with the money in the wallet, can go and buy an asset. But I think the proof of the pudding is when you integrate that asset and execute on the business synergies that the asset really brings to the table, right? So therefore, for me, these are the three criteria. With those three criteria, we said, okay, let's look at both the geo lens and the product lens. In the product lens, I am not averse to core connectivity. If an asset comes at a good value, I'm happy to look at it. But if my strategic aspiration is to dial up my digital portfolio assets, then acquisition there makes a lot of sense. So from a product lens, it is the digital portfolio. From the geo lens, India, I mean, sorry to say, but a lot of them are overvalued. Asia is a little fragmented. So Europe and the US remain as a very, very key markets for us to look at acquisition. Also, I have stated, and so has Lakshmi, my CEO, we have aspiration of getting US to $1 billion. And therefore, even from a strategic perspective, both US and Europe are areas where we would like to dial up our growth, both organic and inorganic. Now, with that context of both geo and product, now when I look at Switch, when I look at Kalera, they really filled the gaps in the product portfolio gaps that I had, and even the go-to-market portfolio. Now, in Switch, coming to Switch, we were market leaders in live sports in video transmission. What Switch gave us was capability in the US, right? Switch have access to 70 sporting venues, across the United States. They also brought in video production capability, which means not only did I have access, to video transmission for the US to big media customers, I also have the ability to take that capability outside of the US as well. Plus, that also meant I could offer more services to my customer through video production, capabilities as well. So then I become more stickier. I'm not only the transmission partner. I am sitting with what we call it create, capture, and transmit. So we have an outstanding, facility in Los Angeles, in Victory Boulevard. It's an amazing, studio, multiple rooms. So we can allow for content creators to come there and create, content. We exist with all the infrastructure, all the state-of-the-art infrastructure for you to capture it. We also have the power of a global network to actually transmit that, globally as well. So I am then bringing an end-to-end holistic solution, for my media customers. So it made eminent sense, for me to look at Switch. Moving on to Kalera, we wanted to be really aspire to offer exciting solutions on the customer interaction suite. Admittedly, we were a little late, to the party. We did have a product called Deco, which was offering the solutions in the customer interaction suite. But then it would have taken me probably 18 months and maybe 30, 40, $50 million to get to the level of where Kalera was. So it was an interesting, asset, which means that it gave me speed to market of the 18 to 24 months. B, I didn't have to spend that money. And more important is that it was a complementarity of customers. all the customers that Kalera was serviced were not Tatacom customers at all. They were very strong in Europe. They're very strong in the BFSI space. So they brought in a lot of complementarity from a go-to-market, perspective. So we did have both cost synergies and revenue synergies identified in our business case. The revenue synergies in terms of selling Tatacom products to Kalera customers and Kalera products to Tatacom customers was exciting for me. So it made eminent sense. Strategic value tick mark, business synergy tick mark, and it came at a good value because it was an asset in distress. So we actually got it at a very good value, 0.78x of sale. Getting a global asset, $340 million, of top line at that kind of a multiple, was a good value. So it made eminent sense for us to look at that as an asset as well.
I thought it was interesting how you explained, particularly the Switch acquisition and just moving into media creation or media development and distribution. It's from my way of thinking, a new arena for you folks. At the same time, integrating this kind of unique type of business into Tata seems to me would need to be a thoughtful approach, just given the managing creatives and the people who normally reside in these types of businesses. And again, it could be tricky. What would you what would you share with that? Given your acquisition experience in the past, and I don't know if in earlier chapters of your career you've tangled with these types of interesting types of businesses that are fit strategically, but sometimes are hard to manage.
Yeah, no, I think a very, very good question. For us in Switch. Firstly, we are global players in the media transmission business. As I said, we are global leader in media. We are the proud, I would say, carriers of Formula One. Right? If you're a Formula One fan, and you can be rest assured that Formula One is delivered to your living room thanks to Tata Communications, right? We've been doing that for years.
Is there anything organizationally you did that you would say is in part the reason for the success you've had with Formula One, that you treated it a little differently, that you had a SWAT team of some kind that did the necessary work to really leverage and understand the value Formula One could deliver? It'd be interesting to learn if you've done something where, the nature of these businesses are different and you're succeeding with it. Why?
Yeah. Well, see, they are different in terms of, what content is being delivered and to who is watching. And, from that element, I agree with you, they are different. But for me, it is still a high quality data, that is captured at one place and is being transmitted over a low latency, very high performance network like that of mine, which has multiple diverse paths, and therefore is able to do, I would say, also production and post-production on the fly, Jack. What do I mean by that? See, I picked the raw feed, and this is a real example. When we partnered with Formula One during COVID, necessity was the mother of invention. So we reduced their travel costs by 90%. I mean, I'm not joking, 90%. How did we do that? For a typical, I would say, event, there are 32 races across the world. We all know that. There's a big crew that used to travel to the venues, to those races. And because of COVID, very, very few people could travel. Yeah. So there were only like 7, 8 of them who could travel, which meant that only the bare minimum filming crew were to be available there. We captured the feed. We brought the feed to our remote production center in Mumbai. We did the production and the post-production in Mumbai. Right? What do I mean by that? Whether it is subtitles, whether it is language, and the commentary that you want to do, and then take the sliver of the curated feed and then send it to the people who are the people who have bought the content rights from Formula One. So it could be a 10 Sports, it could be a BBC, it could be a ESPN, or it could be, a Spanish speaking, audience, in LATAM or wherever, right? So you're doing all of that and sending that, all of which is done in nanoseconds, almost real time, right? So that is the power that we bring to that table. So that's how we became leaders in prime sports. Now I'll take a minute to explain this, then it will become a little easier for you, to grapple your head. We segment this business into three parts, Jack. Global to global, global sports to global audience, regional sports to global audience, and regional sports to regional audience, right? Formula One is a sport played globally, watched globally, right? So it's a global sports, global audience. And I don't want to get complacent. There are not many people like, out there who can be, bring to our customers the power of a global, infrastructure and global network. That's why we become an obvious choice for someone like Formula One to go with it, because we are present with them in 32 venues. We are present. We travel with them literally. Our SWAT team, as you said, travels, venue to venue to capture this and provide that same consistent performance, match after match, race after race, right? So that's one aspect of of it. Regional to global is, let's talk about Premier League. In the UK, there are Man United fans all over the world. It's played predominantly in UK, in Europe, but it's watched globally, right? Then regional to regional is like NFL, right? A Thursday night football. I mean, it's played in the US, predominantly watched, in the US. We were leaders in global to global. There are a lot of regional sports who want to go global, right? Like the Bundesligas of the world. For them, I became an obvious, choice. And then for regional to regional is where Switch came into play, saying that, hey, you know what? There is a lot of sports content that is being watched, in regionally. And I think it makes sense for us to be present there so we can then grow with it. Now, so that's just the transmission part of it. You overlay production on it, both remote production and on-site production. Then you're offering, more. Then to your point, once I am in that, bucket, then automatically I need to develop the capability to start talking with the creative minds behind, these production. So I can then offer the infrastructure. I can offer them the right conducive environment where they can produce this and get that wow, experience for their end consumers as well, right? So it makes a lot of strategic sense for us to do that. For us, it's bread and butter on a daily basis.
Well, Formula One is just one of the partnerships you often flag. And of course, during your earnings call last month, you mentioned other high-profile partnerships with Nvidia, Cisco, Microsoft, Google, AWS. We couldn't help but think a lot of these companies are making headlines with AI today. But partnerships are like press releases. We see them all the time. But what makes Tata's approach to partnerships unique, different, meaningful, more than a press release? What, as you discuss these partnerships, what do you think sets Tata apart?
Well, I think, firstly, I don't want to get either complacent or arrogant with this. Our motto has been leadership with trust, Jack. So if you really want to come to India, and Nvidia, when they were coming to India, and they obviously did their homework as to who they would like to partner, with, and they did tap on Tata, and within the Tata group, it was TCS and Tata Communications, which is what was called out in the press release. So, that leadership with trust. So you're working with an organization where governance, ethics is right there on the top. One. Second is our commitment to excellence. In business excellence, our global presence, our ability to fund and resource any of the projects as long as they add value, right? So there are no constraints, for us on capital or any of them, as long as they provide the right returns. So I think it makes a lot of sense for these partners to tick the box, for with someone like Tata's, and as I said, I don't want to get complacent or arrogant with this. I want to have my feet on the ground, because you are as good as your last quarter, you are as good as your last deal, and if you do not perform on it, after a point in time, all of these are empty words, and you need to execute them, on an ongoing basis. Which is what we do with all the partners that you actually mentioned, the Microsofts and the Googles of the world. Yes, we have and the AWS. We've signed a very, very big deal with Amazon, very recently as well. But we fought for the deal, right, amongst many other competitors as well. So, which means there's nothing taken for granted. Yeah, you need to be able to offer a good solution at a good price and a good value, and they need to be comforted that it will be done in full on time, as well, right? So all of those elements you need to satisfy deal to deal, basis also. So the credibility, the reliability plays a huge role. That when they give a deal to a Tata Communications, they can be rest assured that it will happen on time in full.
Want to touch on AI with you, and again, we've been asking finance leaders sort of this one question. I'm going to read the question and then I'm going to modify it for you. Um, we always like to know, what are the investments a company is making in AI technologies, and how are these investments expected to impact future growth? Now, we realize Tata's been making investments in AI technologies for years, but over the last 2 years, and in fact, since we last spoke, the environment's changed and accelerated to such a degree, and how we talk about AI technologies has changed. And again, we're much more focused now and perhaps a little more aware of generative AI and large language models. And I'm curious, inside Tata, ChatGPT, the introduction a year and a half or 2 years ago, whenever it was, and how all of the discussions that came forth saying, well, we're already doing this, or aren't we leveraging this, or we need to understand better where this could impact our business. Can you give us the nature of the discussion across Tata and sort of the validation of what might have already been, being used and where it could be used more?
Yeah, before I dive into the Tata one, let me, because I know this is a podcast that is watched by many finance leaders across the world. Jack, I want to take this opportunity to say AI is truly going to change, and not just Gen AI, even AGI, is going to fundamentally, change the way in which we will work, we will operate, we will interact, with each other. Personal productivity, first, and some of the personal productivity will lead to corporate productivity. Personal productivity will be of a very different order of magnitude, altogether. I spent, a good part of May, in fact, all of May, I was actually in the US. I spent a day at Wharton, immersing myself with the professors, out there, and the Mac Institute, getting to learn from them. I spent time in the Valley when I went to the West Coast, as well. And I came, home with, I would say, familiarizing myself with what is happening around, and how, as a finance leader, I need to approach, these elements as well. Because, you would ask the same questions like, show me the ROI, and what should be the ROI, how should I approach business cases? Because those are the ones when rubber really hits the road, right? And to get answers, and to look at how business leaders are approaching, these, was really eye-opening for me personally as well. And I would really, really encourage, finance leaders to get out of their shell if they have not already done so, and familiarize themselves, not just for them, but for their teams and for their organizations as well, because it's going to be sweeping them, and it'll have you caught unaware and off guard if you do not grapple with this opportunity. So, with that said, let me dive into, in Tata.com. We have about 1,250 employees who've been trained on AI in the last year. There are about 20 plus data scientists that are there. There are 40 plus projects that we have, funded, and we have got a lot of internal efficiencies, as we speak. But more importantly, what excites me is that the total addressable market for the existing products that we have could expand by $9 to $10 billion, right? Is the addressable opportunity for us could increase just because of bringing in AI, in multiple elements, whether it is in video analytics, whether it is conversational AI, and a lot of the elements of only the narrow suite of products that we operate in and we deliver to our customers. That's the potential that, AI has got. And therefore, for me, when all the enterprises are going to adopt at varying paces, I know that there will always be early adopters for this. So there will be varying paces in which people will adopt. There will be huge amounts of data, I know which whether people use the open LLMs that are available today, whether it's ChatGPT or Llama or or whatever you want to do it, or closed, or if you want to develop on your own. And I'm not here to prescribe what is the right way to do or not, but there's going to be huge amount of data that will go through in the first foundation model training, right? And then there will be a fine tuning and RAG that you will do for your set of data, for that, LLM. And then you'll get into the inferencing mode of actually starting the using of the power of AI. Now the inferencing is probably 18 months, 24 months away, because everybody is today, I would say, focusing all their energies in training, the model and getting their organization AI ready, per se. And so our partnership with Nvidia makes a lot of sense there. We have called out that we want to be the national AI champion for India. Our focus for AI cloud is at the moment only India. We have our strength there. We have a presence here, so we'd like to capitalize on it. We are in discussions with the government. We want to create the right public-private partnerships, create the right ecosystem for all of these enablement to happen for enterprise customers, because they can't afford to invest in AI infrastructure and data centers. So they can rent it from us, whether it is just a pure IaaS that I offer, or whether it's a PaaS, or whether it's a SaaS, whatever offering that we would like to offer all of them, to our enterprise customers, so that they do not miss out on this opportunity. And I'm committed. The board of Tata Com is committed, because these investments are going to run in $3-digit million a tranche, right? It is not one time. And I'm, of course, one of the words that phrases I used was cautious optimism. Yeah, I don't know if this will play out or not. So I'm cautious, but I'm optimistic. I am not. I can't afford to sit on the sidelines and see and wait and watch. So we have taken the plunge. We have placed the first order. We have got the first deliveries from Nvidia as well, and we are going quite fast in getting them to production soon. And once I see that capacity getting utilized soon, then the next order will go in. And then that happens, and the next order will go in, and this will run into, as I said, $3-digit million. For us, when all of my capex until last year was $250 million, we are talking about AI alone. That just one project alone, probably utilizing all of the capex budget. So we will probably double our budget, if everything goes well.
We'll be back with CFO Kabir Shakir after this. CFOs and controllers, does expense management feel like a necessary evil? It's time to switch to Brex. Brex automates and accelerates spend management with easy-to-use corporate cards, travel, expense management, and bill pay, all on one AI-powered platform. Brex makes it easy to boost efficiency and compliance enterprise-wide and free up your managers, employees, and accounting team for higher impact work. Top companies from startups to enterprises are using Brex to automate manual work and transform their finance operations. We're talking DoorDash, Robinhood, Airtable, and countless other industry leaders. Ready to join them? Switch to AI-powered spend management at Brex.com.
Well, thank you for that. We do have two more questions for you. We're going to end with asking you to look forward for your CFO priorities over the next 12 months. But first, we're hoping that you will be a little reflective on your career with us. As we always do, like to focus. And this is kind of such an interesting 4-year tenure for you. Again, the notion that it was Microsoft India, your CFO of Microsoft India, and then you step into this more global CFO role, much more in Tata's everywhere. As we've been talking about, U.S. acquisitions, acquiring companies in foreign lands, integrating them in. It's just an exciting place to be. At the same time, it's a different finance organization altogether. And I'm curious, as you think about, step 4 years back, as you think about sort of being the architect of this finance function, decisions you've made along the way, and I'm certain things might have surprised you, like, well, who would have thought? I guess we don't have to spend money here. It looks like this investment is where to go. I'm not sure, but can you share with us part of the adventure here over the last 4 years as to how the finance function that you've created and you're looking to continue to develop, the decisions that were made, what you did differently, what made you solidified past experiences, anything?
Jack, when I first came into Tata Com and I looked at Tata Com, my first reaction was, "Oh my God, we are sitting on gold nuggets here." Right? I mean, the capability, the asset base, the customer relationships, all of that was so much more valuable and not really reflected in the balance sheet, and not reflected in the balance sheet for various reasons, and I don't want to go into the past. So we looked at our profitability metrics. We looked at our ROCE metrics, right? I'll give you an example. Our business, as we give an example of AI cloud as well, right? We need a lot of investment that we need to make, right? So if we do not make those investments, we're not going to get growth, because I'm an infrastructure-led company. So I need to invest, and once I invest in infrastructure, that is a precursor for me to go and get growth. I'm not going to be in a situation where growth precedes investment. It's the other way around. So if I have to invest and double my investment, there are going to be external stakeholders, including my shareholders, whether it's equity or debt, who are going to raise questions as to why am I spending more on capital. And I need to be able to reassure them that I can deliver a return. Our ROCE, was, when I took over, 8.6%. That was our ROCE, right? Return on capital employed. Our peak, highest we reached was 29%. I remember in my very first quarter, I stuck my neck out and said, my target is to take this company greater than 25%. I would like to operate greater than 25% on return on capital employed. Because if I do not operate at that particular level, I'm not going to have the backing, of my shareholders when I say I want to double my investment. At an 8% return, they're probably better off, putting that money in government securities, with zero risk, and sitting and rather than putting the money into Tata Com. Yeah. So very, very clearly, we need to be able to demonstrate that kind of a performance, and we got there. And once we have got there, it's the same shareholders who were earlier worried about our investment going up, today coming and saying, why not? Why not more? Yeah. So if we have an aspiration that we want to take this company to start spending $1 billion of capex, people are excited about it. And I think it's very important for us to have a robust and a comprehensive and a very clearly articulated finance strategy. Yeah. And I don't remember whether, at that time we spoke about the finance strategy. Probably I did. But at the time it was conceptual, Jack. Today it is alive, because my finance strategy, the fit to grow, part of the strategy was to drive profitable, sustainable growth, get the benefits of that growth with this, whether it is margin expansion through mixed benefits or operating leverage or efficiency improvement, reinvest that back into platforms, into innovations, and including tactical M&A, which then gives me go-to-market capability and product capability, which then drives further growth, and it gets into that virtuous circle. That is the fit to grow model that we had in Tata Com. Conceptual when I spoke to you 2 years ago, but today it is alive because we funded Switch. The number is out there in the public domain. We paid $59.8 million for Switch, all of which came from working capital improvement, all of which came from internal accruals, right? Because this model was working. Now we have funded Kalera, which is a $280 million, much bigger deal. Our ratios have departed from their ambition, but I have a very clear-cut, plan as to when they're going to get back up. My net debt to, EBITDA was, our stated ambition is to remain under 2x. We went as low as 1.3. So now with the Kalera acquisitions, we are over 2 now, 2.2 last quarter. By end of this year, I will get under 2. My ROCE, which was, as I said, greater than 25%, the peak was 29. It's now down to 17%. But next year, I will get back to greater than 25. My EBITDA, which was 23 to 25 as a range, we operated at the north end of 25, all of the period that we communicated. In fact, it touched a peak of 26.6 in one of the quarters, as well. We've now gone under 20%. Last year, I ended with 18.6 in quarter four. Last quarter was Q1 was 20%. We will get back in 2 years' time to the same 23 to 25. So today, I think the confidence is there in the market that we were at a very, very weak financial position 4-5 years ago. We got this, improved to the right levels, ambition levels that we want. And then we used that elbow room that we had and the bandwidth that we had to put into acquisitions, which are value creating, hopefully for all the stakeholders, my customers and my shareholders. And I have departed and I have a plan to get back in. And when I get back in, I don't intend to stay there. I'm going to use that ammunition because now I will have a bigger debt capacity. I will have an ability to buy bigger, targets, and I'm going to use that and propel this organization, forward. So I would say it is extremely inspiring, extremely energizing, to be able to create this partner with, with Lakshmi and the board, with the strategy that we have for the company, and finance is really rubbing shoulder to shoulder along with the business, and in quite of many cases, very positively and strongly influencing company strategy and outcomes as well.
Let me just, and forgive me, I want to ask you a follow-up here just because I want to, the people, the finance team, this sprawling global team today, has the mix of people changed on it? Have the from 4 years ago as you came in, do you have a bigger percentage of FP&A professionals, a smaller percentage of FP&A professionals? Did you change the development of these people in some fashion, some way? How do you develop these people you depend on so much?
Well, three aspects, I would say. Firstly, I have not increased a single headcount in finance in the last 4 years. In fact, I would like to reduce because I would obviously like to, if I am sitting in digital transformation, and selling the medicine to my customers, I need to eat it myself first, as well, Jack. And I fundamentally believe that whatever investment that we make are going to be in customer facing organizations, whether it is product developing, or engineering or our go to market, not the support functions, so it is not democracy. It's everybody doesn't get the same FT increase. Support functions, including myself, we don't get. So to be perfectly clear, we added zero headcount, in finance. In fact, as I said, I would like to even reduce it. Now, what did we do to engage? Every person within finance has got a career development plan, right? And we, it's not 2 years. We have a finance careers and learning week that we run for a week, virtual, week, where we expose them to opportunities inside the organization. We expose them to opportunities outside the organization. We expose them to developmental gaps that they might have. We've supplemented that with technical courses that we run, right? So the fact that you're a chartered accountant and you passed out 20 years ago and you think that skill is enough, I'm sorry. Things have changed. The external environment is changing, even within the finance domain, right? The Companies Act has changed. The Income Tax Act has changed. BEPS 2.0 is coming globally. Every a geopolitical situation has impact on tariffs, interest rates, all of them. So I want people to be abreast with these changes, including going back to in classroom courses as well, right? So the focus a lot on functional skill set, a lot of focus on business intimacy, because end of the day I want my finance talent to understand business. So a lot of focus on business intimacy, so we speak the language that our business partners speak, our customers speak, and a huge push on DE&I. I'm a big proponent of diversity, equity, and inclusion. It's now for 2 years. We've got many awards and accolades for it. We run a big program for women in finance in Tata Com. I'm very, very passionate about diversity and inclusion. Yeah. So a lot of effort has gone into that, including the top team, the finance leadership team, as I call my own directs, and myself, where we have done multiple interventions, including reverse mentoring, right? so that I don't want to sit out there saying I know it all. I know nothing is how I come into work every day. And sometimes when you do this reverse mentoring with 21-year-old, 22-year-olds, they bring, they say it unapologetically right on your face. They bring it down to, to the ground straight away, crashing. So all of these interventions have actually gone into the talent, and I would say the proof of the pudding is in the eating. We have an employees, satisfaction survey that we do every year. I'm sure, like every other global companies, did. From the 76% that we used to be, we're now at 94%. So the employees are engaged in finance. We are the best ever within, Tata Com as well as a function. So all of this is seeing. So you are, getting developed. Your contribution is visible to the business, and you are engaged. I mean, that's what more can I want, from my team.
Excellent. Thank you for that. We're up to our final question. We're going to ask you to look forward, finally. We're wondering about these next 12 months. I think you've already shared a few clues as to what your priorities will be, but we'll ask the question anyway. What are your CFO priorities for just this coming 12 months? What are the things that are on your radar constantly?
Jack, the one keyword I want to leave you with, and the viewers and the audience with, is resilience. I think we have a lot of volatility around the world, right? Will Fed meet for an emergency meeting, and will they bring down the interest rates or not? And you see how yields were reacting just those 2 days, right? The volatilities are very, very material. Yeah. What will happen to the geopolitical, situation, right? I mean, Biden, getting out, of the presidential race, or not. What is, the equation vis-a-vis Russia, vis-a-vis China, what's happening here in India, even in my own, part of the world that I am in with Bangladesh. There is volatility across the world on geopolitical side, on taxation side, global taxation side, global supply chain, and the works. Red Sea conflict. I mean, we had multiple cable systems of ours that going through the Red Sea conflict. Plus, look at the CrowdStrike, that happened. We are in a hyper-connected ecosystem. So a lot of them, they bring in a lot of opportunities for us. I'm excited and energized about the opportunity, but they bring in with it heightened amount of volatility and heightened risks. So for me, the key word is, do you have your P&L and balance sheet resilient enough to manage through these shocks and prepare all the time? If one day goes by where I don't have a fire, I actually feel uncomfortable because I probably have not looked hard enough. Yeah. And I don't want to get into the complacency at all. And that is my sincere advice to a lot of my fellow finance leaders. Don't get complacent, about it, because the world around us is changing rapidly. And if we can do something as finance leaders, is how resilient can we make the business to tide through these volatilities and yet capture the growth and the opportunities that is available for us, right? That is my big priority. So I can say growth, but yes, growth is there. But what am I doing under the growth? This is more important for me. Okay.
Kabir Ahmed Shakir, thank you for joining us on CFO Thought Leader.
Thank you very much for having me, Jack.
Hello, listeners. Jack here. I hope you've been enjoying some of our recent CFO Thought Leader episodes. To better serve you, we need your feedback. And our 2024 listener survey is now live. What do you like about CFO Thought Leader? What don't you like about CFO Thought Leader? This is what we call continuous improvement. We want to serve you better, but we can only do that by hearing from you. You'll find our 2024 survey right on the nav bar at cfothoughtleader.com. To demonstrate our gratitude, survey takers will receive a $10 savings coupon on the purchase of our new book, The CFO 500. Take the survey and the coupon is yours. Please help us serve you better. And as always, thank you for listening.